I'm Shae Russell from mining.com.au, and I'm once again coming to you from the floor of the RIU Sydney Resources Round-Up. Standing next to me is an absolute legend in the Australian gold space, and that is Sean Russo, the principal of Noah's Rule. Sean, it's an absolute pleasure to see you. How are you,
Nice
mate?
to see you, Shae. I'm great. Very good. Enjoying the conference.
Yeah, it's been a great conference. Now, our hot topic here at the conference is gold, and I know this is your area of specialty. Tell me, what are you seeing happening in the gold space at the moment?
Well, I mean, this time last year, gold was starting to really take off. It was making new highs. And when I spoke at this conference last year, I spoke about a lot of people who were very passionate supporters of gold were questioning the rally because real interest rates and gold had broken down, and they were very suspicious of the rally. And we made the point a year ago that we weren't suspicious of the rally. I mean, you got to be careful fading any markets making new highs, but we were seeing gold start to outperform general equities. And our long observation is in periods of time where gold is outperforming general equities, general equity investors who normally don't pay attention to gold or gold mining start to pay attention to the sector. And we've seen that in spades. So the Dow Gold ratio at the conference last year was 18. Today it's 13. Ooh. So that's a big move. And I said in the conference last year, watch out for fireworks if it breaks through 16. And that's what we've seen during the year. So that fundamental driver for gold is very positive. And those periods of time in the past where we've seen gold outperforming general equities have tended to be 8 to 10 years long.
Oh.
And we're in this for maybe 2 or 3. We're only 2 to 3 years into what generally are much longer cycles, which we saw from 2001 to 2010 or in the 70s.
That's ultra promising that you believe we're at the start of a much longer cycle. But let's bring this back to the explorers at this conference. Like, obviously, there's a lot of people pivoting into gold at the moment. But how does a gold bull market benefit gold explorers or even people with, smatterings of gold in their project?
Well, I think firstly, those generalist investors who start by buying some gold in their portfolio for protection, once they own gold, that gets them thinking more about gold. They start thinking more about gold mining companies. If they see gold mining companies start to outperform gold, they rational investors, they may switch across. Those investors in the beginning are more likely to be switching across to the large cap companies. But the large cap companies, if they're looking better, they're then looking to replace supply. But I think right now, John Forward of Lowell put it beautifully when he said 50,000 ounces is the new black.
Oh, really?
And this idea that someone who's got 50,000 ounces of gold or 30,000 ounces of gold, but has a clear pathway to production, they're the ones that are interesting to the punters now, to people coming in. So it's a bit unfortunate. People have worked really hard to build up a 1 million ounce reserve, 100,000 ounce a year for 10 years, but they would have to take 2 years to build that mine. The investors don't really have the patience. Those shares are doing okay, but the interest is in the people that could dig it, truck it down the road to somebody else's plant and make bank in the next 18 months, 2 years. So that's where you're seeing a lot of interest. And there's a lot of people at the conference here who are in that position. So they were trying to work something up that was bigger, and all of a sudden the market's saying, hey, what you've got, don't muck around, dig it up, drive down the road, put it through another plant, turn it into cash, because who knows how long these prices are going to last. I think that's part of the other issue. I think a lot of people are skeptical that the price can't last much longer. So it's about let's make bank while we can, because otherwise if you build something in 2 years' time, it may not be any good. I don't have that view, but I can see why there's the show me the money kind of attitude.
I can absolutely see why some people are skeptical of this rally, but I know you're not afraid to make a bold call. Sean, you said you don't hold that view. Do you believe it's much longer to come, much higher upside?
Well, I've said this for years, and it's not an original idea in the sense of P. Ellison, who very well known in the gold market. One of the first people I saw talk publicly about the Dow Gold ratio and that type of thing. The year that I finished high school in 1980, the Dow Gold was 800 and the gold price was 800. So that I've always believed that the idea that the Dow Gold ratio could go back to 1 in my life, assuming that I'm careful crossing the road, in my lifetime you could see 1 to 1. So what does that mean? Does that mean the Dow would fall from 40 to 20 and gold could go to 20? Well, that's possible. The Dow halved in 2007 from 14 to 7,000. Hard to believe it was back there, but so that idea. So my big call is at some point, and whenever I'm asked to make a gold price prediction at these conferences, what I generally say is, if you sell something today and buy gold, I think you'll be able to buy more of that something back with the gold you own a year from today. On a relative basis, I think gold's going to outperform strongly.
Sean, I'm bummed I actually don't have more time to speak to you. I love your thoughts. Listen, thank you so much for your time today. I know you're super busy, so I'll let you get back to it. And
Thank
good luck
you.
with your presentation tomorrow.
Lovely to see you again. Thanks.
see you.
Bye.